You know what? Let's start with some energy today and a few financial sins. During the European session, the Nikkei hit a brand new all-time high, surpassing 50,000 points. At the same time, the S&P 500 also set a new record, 6,861. So, I want to ask you something. What message are these markets sending us? What are they really trying to tell us with these unstoppable uptrends? Because today, I'm going to answer 4 key questions, and I promise by the end, you'll see how they all connect. What's behind the record highs in the Nikkei and the S&P 500? What's really happening with Bitcoin? Is this the start of a run toward $165,000, or just a rebound? Could the supposed trade agreement between the US and China mark the top of this market? And finally, the question that honestly makes me a bit sad. Is artificial intelligence not firing young people, but actually preventing them from being hired in the first place? Stay with me until the end, because this is one of those days when everything in markets, stocks, Bitcoin, AI, and even politics fits together like a puzzle. Let's start with that first question. The Nikkei just broke through its resistance at 50,000, but Japan's economy is stagnating. Back in 2009, Japan's GDP was $5.3 trillion. By the end of 2024, it had dropped to $4 trillion. That's a contraction. Meanwhile, the Bank of Japan's balance sheet has skyrocketed by 650%. That means one thing: the real economy shrinks, while liquidity expands. That's what I call monetary degradation, a pyramid scheme, plain and simple. And what is Japan's new prime minister planning to do about it? Stop the monetary decay? Of course not. She's planning another stimulus program, more public spending, more debt, and the same recycled policy. And who will buy that new debt? The Bank of Japan, obviously. But here's the shocking part. The Bank of Japan already owns 51% of all Japanese government bonds. That's not economic management. That's a controlled demolition of the monetary system. So yes, fiat currencies are already on the funeral pyre. We're watching their slow and deliberate destruction. And this decay of fiat value, it's spreading everywhere, from Japan to Europe to the US to China. So let me ask you, if you lived in Argentina, would you rather hold pesos or Bitcoin? If you lived in Venezuela, bolivars or Bitcoin? If you lived in Nigeria, naira or Bitcoin? Or if you were Japanese, would you prefer the trash yen or Bitcoin? Even in Germany, where the economy's sliding into recession, what would you rather hold, the euro or Bitcoin? I think we all know the answer. Next, let's dive into what's really happening with Bitcoin, because the charts, the ETFs, and the data are all pointing in the same direction. Let's talk about Bitcoin. Bitcoin has started to wake up, and the technical picture looks fascinating. It's been moving in sync with the Nikkei, and that's not random. It's a reflection of global liquidity. When money flows freely, risk assets rise together, and Bitcoin is now part of that group. But let's look closer. Bitcoin broke through resistance levels and moved sharply upward. Now it's consolidating, but it's not losing momentum. That's the key point. The market looks strong and clean. The structure right now is classic. After such a rapid move, Bitcoin tends to pause, build a base, and prepare for the next breakout. From a technical standpoint, that's exactly what's happening. The market's digesting gains, waiting for new liquidity to come in. And let me tell you something that matters even more than the charts: scarcity. When people say, Bitcoin is scarce because there will only ever be 21 million coins, that's true, but incomplete. In practice, the market's liquid supply is much smaller. Millions of coins have been lost forever. And as of today, more than 78% of all Bitcoin hasn't moved in over a year. That means fewer than 5 million coins are actually circulating in the open market. Add to that the massive inflows into Bitcoin ETFs, from BlackRock, Fidelity, and ARK, and you realize something crucial. There simply isn't enough Bitcoin for everyone who wants to buy. Institutional inflows into Bitcoin ETFs have exceeded $5 billion year to date, while exchange balances keep falling to multi-year lows. That's what real scarcity looks like. At the same time, we're seeing money flow out of gold ETFs. Gold is stable, but static. Bitcoin, meanwhile, is digital, borderless, and liquid. And right now, that's what global investors want. This isn't about speculation anymore. It's a rotation from old stores of value to the new one. Gold had its centuries. Bitcoin is having its decade. And remember what I said before, the Nikkei, the S&P 500, and Bitcoin are all showing the same pattern. They're all telling the same story. Liquidity is still expanding, despite what central banks say. That's why I don't see these market highs as a warning. I see them as confirmation. Liquidity hasn't disappeared, it's simply changing shape. So, when people ask me if Bitcoin is overbought, I smile. Because this isn't the end of the move. It's the beginning of the next phase. A phase driven not by hype, but by mathematical scarcity and institutional demand. Let's face it, the fiat system is finished. Governments are drowning in debt. Central banks are addicted to money printing. And citizens are losing purchasing power every single day. This isn't a crisis. It's a structural collapse. The final phase of a monetary system that only survives by creating more of the problem it's supposed to fix. Look at the numbers. Japan's GDP has been shrinking for years, while the Bank of Japan's balance sheet has exploded by more than 650%. The US is running record fiscal deficits. Europe's debt-to-GDP ratio keeps rising. And even China, once the growth engine, is slowing down. And what's the solution every government offers? You guessed it, more debt. It's madness. The global economy is like a patient on life support, kept alive by liquidity, unable to breathe on its own. You see, the problem with fiat money is that it's based on trust, and that trust is fading. Every time a central bank saves the economy by printing more money, it destroys the currency it's supposed to protect. Fiat money dies quietly, not through collapse, but through devaluation. People don't notice it day by day. They just realize that the same salary buys a little less every month. That's not bad luck, that's inflation by design. But now, there's a new layer to this story, artificial intelligence. AI isn't firing people, it's preventing them from ever being hired. I see it everywhere. Companies automating tasks, reducing costs, and reshaping the economy without needing human labor. That's the real risk. The young generation isn't entering a job market. They're entering a world where human work is becoming optional. And when millions of young people feel economically excluded, you don't just get unemployment, you get instability. Around 40% of global jobs could be disrupted or replaced by AI within the next decade. Meanwhile, real wages have stagnated in most developed economies since 2020, despite rising productivity. Now combine those two forces, a collapsing fiat system and an unstoppable wave of automation. What do governments do when they lose control of the economy? They try to control the people. That's where central bank digital currencies come in. They'll tell you it's innovation, that it's about efficiency and transparency. But make no mistake, CBDCs are not freedom, they're surveillance. Every transaction, every purchase, every donation, monitored, traceable, and programmable. That's not financial progress. That's digital authoritarianism. So yes, fiat money is burning, and AI is accelerating the fire. But history tells us that from every collapse, a new system emerges. One built on what the old one lost: truth, transparency, and scarcity. You know, every time I talk about this, people ask me, so if fiat money is dying, what comes next? And my answer is simple. We're not watching the end of money. We're watching the rebirth of value. For centuries, money was built on trust in governments. Then, after 1971, it became trust in central banks. But today, people no longer trust either of them. Now, for the first time, we have money that's based not on promises, but on mathematics. Bitcoin isn't perfect, but it's honest. It doesn't lie. It doesn't print itself. And it doesn't ask for permission. That's why the institutions that once mocked it are now quietly buying it. Because deep down they know trust has migrated from governments to code. Meanwhile, governments still play their favorite illusion. Everything is fine. They say debt doesn't matter. They say inflation is under control. They say growth is coming back. But you and I can see the truth. The real economy isn't growing, it's inflating. We're not richer. We're just running faster on a broken treadmill. This is the final illusion of fiat. The belief that you can create prosperity with a keyboard. But every illusion ends the same way. When people stop believing. And that's already happening. Bitcoin represents something that fiat never could. Limited supply and unlimited transparency. There are no secrets. No political manipulation. Just code, math, and consensus. Scarcity always wins. It's a law of nature. Gold once held that position. But now, we live in a digital age. And digital scarcity is the new foundation of value. That's not a fantasy. That's evolution. Of course, not everyone likes this shift. Because if people can store value outside the system loses control. That's why we'll keep hearing about regulation, about safety, about how governments need to protect consumers. But make no mistake, they're not protecting you from risk. They're protecting their power. And that's why Bitcoin matters. Because it's not just a hedge against inflation. It's a hedge against control. So here's what I think. We're not entering a financial crisis. We're entering a monetary transformation. From trust in institutions, to trust in transparency. From infinite money, to finite value. From fear, to freedom. This isn't the end of an era. It's the beginning of financial truth. And those who understand it, those who act before the crowd, won't just protect their wealth. They'll help build the next system. And that, my friends, is what freedom really looks like. If you want to keep following these analyses, where we go beyond headlines and dig into what's really happening, make sure to subscribe and like this video. Because information, real, independent information, is the only asset they can't print.